Do your the favor, then go back to school. Wanna hate this school, man, let these take they food. Swimming in this money, homie. Get the hell up out my pool. Couple reps of spinning. Shopping, claim I was famous. Hanging out with pretty faces. Smoke they flowing from their ears. Ain't no money coming out of my. Just some cold hard cash sitting in this black bag. Paper to be made. Man, you know we live that stupid life. If she get my wedding ring, know that she is super tight. The world is fine, can we get a tape? Below my waist, getting money, whatever it takes. I'm to the top without no break. Thought I wouldn't make it well. Now I got the game, homie. All right, all right, all right, all right, all right. Welcome to Ask the Trader, and I'm your host today, Joel Harrison. Noble won't be able to make it today, and that's fine. All right. So at the last minute, I had to pull something together. So what I want you guys to do, since I'm going to be handling this on my own today, is I want you to put a stock in the comment section. All right. I want you to put a stock in the comment section, and what I'll do is once I get that comment that stock in the comment section, I will analyze that stock for you. So happy Friday. This was a rough week. This was a very, very, very rough week. All right. We had 600 point down, 600 points, 800 points at some point, I think on Monday or Tuesday. So I've been, writing down my Christmas list of stocks that I want to buy. And I've been stock picking. I've been buying a lot of PayPal. I've been buying a lot of Disney. I've been buying a lot of CrowdStrike. And I've been thinking about different options contracts that I also want to buy, further out. So around this time is the Christmas rally. So the Christmas rally usually starts right after Thanksgiving. So we did have a sell off. We didn't know that Omicron was coming, which sounds like a Decepticon. But let me pull over to Yahoo Finance. But the tech stocks dragged the indexes lower today, and it looks like the market's been selling off really, really hard. All right, so again, I want you to give me your comments give me your stock in the comments section, and I will analyze those particular stocks. Let's see a couple of people that are on right now. We have Freddie Ra in the house. What's going on, Freddie? All right, we're gonna take a look at Apple. We're gonna take a look at maybe MTTR Matterport. All right, so hold on for a second. My niece is grabbing my dog, my security. All right, gotta have security when you're in the house. All right, but the tech stocks have been bringing us down, this week, right? So your Apple was actually up this week. But if you're interested in buying the Microsoft, if you're interested in buying the Google, if you're interested in buying all of these different companies, I'm going to show you guys how to analyze them so that we can pull them up. So let me go ahead and pull up a chart. Let's go ahead and look at the spiders today. So the spiders, let's get a clean chart. All right, so let's get a clean chart. Hold on for a second. My helpers are helping me out. Let's get a clean chart. And all right. All right, so I got all types of things going on right now. All right, so let's look at the spiders right now. So the spiders, as you can see, hit the 50-day moving average. And as it hit the 50-day moving average, a lot of people are taking a shot at buying it right now. Okay. So as it's coming down to the 50-day moving average, as you can see, the TTM trend is. All right, hold on. Give me a second. All right. Sorry about that. Just a little bit of technical difficulty. All right, so the S&P 500 has been going down in value. All right. So it looks like it might be able to get to the 200-day moving average. And right now, as you can see, it's only down about, 5%. So I put out a post yesterday that showed you how when uh when the Delta variant came out, the market dropped 4%. And now when Omicron dropped, it also dropped 4%. All right. So you're going to get a lot of people that might take a chance here. But using my tools, it looks like the market wants to go a little bit lower. Now, even if it gets down here to the 200-day moving average, if you notice, it took about what, 3-4 days for it to sell off to here. Even if we get another 3 or 4 days where the market sells off all the way down to this 200-day moving average, we're going to be down about 10%. And if we're down 10%, that's right around, I think the lowest that we've gone is what, 8% this year. So if we drop down to about 8%, you're going to see a lot of buyers come in and buy the market, in my opinion, especially seeing that this is the Christmas rally. And what is the Christmas rally? The Christmas rally, guys, is a rally that happens every year. On average, every year, most traders know that at the end of the year, right after Thanksgiving, all the way up until, sometimes all the way up until April, you're going to see the market run in price. Now, why is that? Because most companies are going to make their money during this time. You got your Apples, your Amazons, your Googles. They're all going to make a lot of money during the Christmas period, and they're going to show their earnings in March. So a lot of people like to take advantage of that time frame, and I've been doing it for years. I've been talking about the Christmas rally. If you go into the insider trading room right now, you can type Christmas rally. You will see that I've been talking about the Christmas rally for over 5, 6, 7 years, and I've been capitalizing off of it. But it looks like we're struggling just a little bit. So I want you guys to be careful when you're looking at the stocks, when you're looking at stocks to buy. So this is how the market looks today. All right. Looks very, 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 very bad. But I don't want that to scare you because the market is only down 4 or 5%. This is normal. The market sells off 4 to 5% every year. All right. 4 to 5% every year. Okay. So this is normal. All right. So as a trader, you want to come in there. You might want to, I'm going to pull up my 1 hour chart. I'm going to use the moving averages today. But while we're waiting, trying to compile a list of stocks to look at. All right, you guys have given me a lot of stocks to look at. So let me go ahead and pull up our charts. And I'm going to show you guys how I would analyze these stocks. So first off, we need Yahoo Finance to analyze the stocks, right? So when I pull up a stock, for example, the very first one that I see from Byron is going to be Apple. All right. So when we pull up Apple, Joel is going to look at this market 3 different ways. I'm going to look at it as an investor. I'm going to look at it as a trader, and I'm going to look at it as a intraday trader, someone that's trying to earn income daily. Okay. So when you're doing that, you need to have 3 different charts that you're looking at. The problem that a lot of you guys make is that you're trying to do everything on one chart, or you're using 10 to 15, 20 different indicators, and you don't really know what kind of time frame you want to be in that particular trade. So if I was trading something like Apple, oh my God, my family is giving me the business right now. They know I do this every day at 12 o'clock, and anyway. So if y'all hear me leave and curse out a couple of people, y'all know what it's about. All right. So we have the 20-day moving average. You got to love family. You got the 20-day moving average. You got the 50-day moving average. And then you have the 200-day moving average. Now, what I'm doing today is for free, right? We do this all the time because if you don't know the fundamentals of the fundamentals of the fundamentals of investing, I mean, you can go on YouTube and learn about moving averages. I don't really have to teach a class or charge you guys
money to do this. We should have been learning something like this in grade school. All right. So the different moving averages are going to tell you the type of time frame you want to be in that trade. All right. So the way that I teach to my clients is the value of the moving average is the amount of time that you want to be in that trade. So if I'm using the 200-day moving average and I buy like Apple and I buy Apple at the 200-day moving average, I have to give myself 200 days 200 days, which is what, half a year, 6 months to see if that trade can go into the profit. So when you're using the 200-day moving average, guys, it's not a day trading or a swing trading tool. And I tell people that all the time. Now, every now and then it might hit it and it might just start going up in value. And if it does that, that's when you put yourself in a winning situation for 200 days. Okay. So when Apple came down and they hit the 200-day moving average, it was a sweet trade. If you had bought options on it, you would have made money. If you had looked at the 200-day way back, Apple hasn't hit its 200 days since March of 2020. You remember the March? You remember the pandemic lows in March? That was the last time Apple hit its 200-day moving average. And then it moved up in price. And we didn't see it hit its 200-day moving average again until here. And when it hit its 200-day moving average, it started to go up in value. All right. And then again, it came close to the 200-day moving average, but now we're sitting at highs. I see a lot of you guys trading Apple right now. You're newbies, you're getting into Apple. You kind of lucked up and made money in the last, 2 weeks to 3 weeks. Why were you making money? Like a lot of people don't understand why they were making money. Were you making money? First of all, there's fundamentally why were you making money? So what we're going to do today is we're going to ask ourselves questions. Fundamentally, why is this going up? Well, fundamentally, Apple does well during this time frame, right? They release their products in September, and then October, November, December, we're buying Apple products, right? So Apple usually does well during this time. So fundamentally, it's good. Technically, why were you winning? Well, technically, you were winning because we hit the 20-day moving average and we hit the 50-day moving average and we started to go higher. The 20-day moving average usually tells you that you can make money for like 20 days, right? So when we hit the 20-day moving average, if you wanted to take a shot and it was November the 10th, it probably started to go up in value, which it did. Right around the 11th, 12th, 13th day, you might want to start taking profit before it comes down back to the 20-day. The 50-day, it also hit. So when you hit the 20-day and the 50-day at the same time, it's like two nets. If I fail and I fell on one net and then I got another net underneath me, it's so much support there that it gives you a chance because you got your 50-day moving average traders that are buying, and you got your 20-day moving average traders that are buying, and you have your fundamental traders that are buying Apple. So that's why you've been winning. But you guys, if you're not using the technical side and it starts to go down in price, you're going to start asking yourself, why is this happening? And where could Apple go to? Apple can always drop down to its 200-day, 50-day, and then its 200-day moving average. Before Apple even drops to its 200-day moving average, you should always know about how far that is. That's about a 19-20% drop. Apple drops 20% every year. How do we know this? Because Apple has a 1.1 has a 1 point pretty much 2 beta, right? So that means when the volatility index is average, it's going to drop 12% or go up 12%. It's going to fluctuate 12%. But what's going on with the volatility right now? The volatility is double. So if Apple normally moves 12% and the volatility is up 2x, that means Apple normally drops about 20%, 24%. Very easy calculations. A system that I kind of created, right? Using volatility, using beta, calculating those numbers, trying to figure out, realistically what that stock can drop to. All right. And all you got to really do, if you kind of understand what I'm doing, all you got to do is you got to take the beta, but you also got to take the VIX. And everybody knows the VIX has three numbers: 16, 32, 48. 16 is 1, 32 is 2, 48 is 3. So anytime we get a VIX over 3, something like Apple's not going to drop 12%. It's going to drop like 30%. All right. These are some of the fundamental stuff that I teach during webinar week. Webinar week is coming December 14th, 15th, and 16th. So if you haven't signed up, you better sign up now, because the price that I have it at right now, this is the last time y'all are going to see it at $65. Prices are going up. All right, so get in, get in if you can. If you do choose to go to webinar week, hold on, let me go ahead and pull that up while we're talking about it. If you do choose to go to webinar week, it's a 3-day webinar, right? You're going to learn how to trade the stock market the first day. You're going to learn how to trade the options market the second day. We're going to talk about options in the second. And then you're going to learn how to day trade the third day. It's not recorded, guys. I mean, it's going to be a recorded session, but it's not going to be a recording that you guys are watching. It's going to be live just like this. And I'm going to be live for 10 hours plus. Why do I say 10 hours plus? Because sometimes I might go on for 4 hours, depending on how much energy I have and how many questions I have coming in. Right. So it's from 6 to 9:30 every day. I think last webinar week, because we had so many people there, I think we had over 70 people there. I went to 10 o'clock every day. Because everybody wanted to know the information. We were looking at so many stocks, and a lot of us capitalized on a lot of the stocks that we analyzed during webinar week. All right, so make sure you guys take advantage. Also, you can always download my videos if you go to PayHip. If you need to get educated right now, you can always go to my PayHip. And anybody that has not downloaded my app, you need to go ahead and do that as well. It's free. It's a free app that you need to download. There's other things that are happening in the room. We have a retreat that's coming up. I'm going to talk about it more towards the end of the session, but our first annual Aruba trading retreat and conference is coming. And I see that that's misspelled. We gotta fix that. But our first annual Aruba retreat is coming next year, August the 3rd through the 7th. We're gonna have a lot of fun. All right, we're gonna have too much fun. Me and Noble are going to create a class together that nobody has ever seen, that only people that go on these particular retreats are going to have access to. Now, normally you'll get either me or you'll get Noble, but you'll get both of us during this retreat. And we're going to have a package class that pretty much has everything that I have to offer, a lot of the stuff that he has to offer packaged together, which is included in the price of admission to this retreat. So sign up. I believe the deposit right now is only like $500. It is going to go up as we start getting closer to the date. But, come on out with your loved one, your spouse, or come out by yourself so that we can have some fun, with each other. We've been in the insider trading room for so long. But let's get back to business. Let's talk about this volatility index. As you can see, the volatility index has risen 10% today. All right. Now, I always tell people, when the VIX gets above 30, you can start buying stock again. I don't even touch a stock until the volatility index is above 30. Once it starts to get above 30, then I start stock picking. When it gets to 40, I really start loading the boat. When it gets to 50, I try to find any and every bit of money that I possibly have to invest in the market, because it's not sustainable. Again, we teach this I teach this during webinar week. But let's go back to Apple, because Apple made people so much money this week. Because we're up so high in Apple, right? The only way that I would trade Apple, all right? Now, this is an investment. If you're investing in Apple, I tell people, if you're buying it for your kids, just buy it now, right? Because what's the difference between 160 and 140 if the stock is going to be a $500 stock, in the future? Like those extra 10 or $20 really don't make a difference. But if if you got thousands and thousands of dollars that you're trying to put into it and you're trying to get an edge, then you might want to wait, or you probably want to use technical tools. I know a lot of fundamental investors that don't even use the technicals, but they do have an alert system where they say, all right, if Apple gets close to the 200-day moving average, go ahead and I might buy some when my alert goes off. I'm going to get a text. It's going to say, hey, I'm alerted. Now, I put out alerts in the room all the time. I put out alerts all week long. So if you look for the hashtag alerts, and what would Joel do? You'll see my own personal alerts that I had to go out that I shared with you guys for free. Now I do have an alert service with the app for your traders and investors and anyone trying to watch videos. But I also have just single just alerts that I do during these Ask the Trader calls. But let's see what Apple is doing. Oh, sorry about that. Wrong chart. Let's see how Apple is doing 7 to 10 days, right? If you're trying a 7 to 10 day trade, there's no reason, in my opinion, for you to look for the 200-day. Like if I'm trying to make money next week in Apple, why am I looking at charts, year charts, and trying to get an overall view of the market when all I know is that, the momentum is either going to go up or down? So I got a saying, right? You know that you're investing because when you're investing, you're buying when people are crying. All right. You're buying when people are crying. As a trader, you know to be a buyer when stocks are on fire. All right. When stocks are on fire, that's when you're a buyer, and that's trading. That has nothing to do with investing. A lot of y'all have it backwards. Y'all want to trade when people are crying. You don't trade when people are crying. Okay. You invest, you buy when people are crying. All right. You want to be a buyer when stocks are on fire. Because if I'm trading 5 to 6 days, I need momentum behind it. And you're starting to see a lot of very, very educated teachers on TV start with the same principle, because it hasn't been a principle that we separated, probably until the last 5, 6 years, when a lot of traders decided that they wanted to trade and invest in the market and they didn't know what was going on. So with COVID, with so many people getting into trading again and cryptocurrency being really, really hot, you're starting to see people do it on their own, but you're still doing it wrong if you don't know what I'm doing. I don't know if I'm buying, or I don't know if I'm investing. And that's where a lot of individuals struggle. So, Apple, I always tell people stocks are going to run 7 to 10 days if you're looking at an hour chart. Once it gets above this yellow line, y'all make trading very, very hard. Joel doesn't make trading hard. Trading is so easy to me. I can do it in my sleep, because all I look for is momentum on a fundamentally good company. If Apple gets above here, I know it can run for 7 to 10 days. So if I want to buy options on it and I want to take an option next week, I really say to myself, all right, is it the time of the year that Apple runs? Yes. All right. Are people buying it? Yes. Is it above this Ichimoku? Yeah. It should run 7 to 10 days. And then I'm going to go in there and I'm going to look and see if there's unusual options activity. Now Apple is going underneath this yellow line. Now it's still bullish because the yellow line is still angled up. But I also want to go and see if there's unusual options activity next week. So these are the options for today. As you can see, the strike price everybody was picking was 165. Let me close this so you guys can see a bigger screen. All right. Now, if you're trading and you're not using the ultimate trading tool to trade, which is the options market, you're leaving a lot of money on the table. Okay. Because Apple Well, it's up a percent. I mean, it's down a percent today, so you would be down pretty big if you were in the options market. But when Apple is running up in price, there were so many people that made 100%, 1,000% returns on Apple this week. Even though the stock was only up 5 or 10% for the week, the options were up like 1,000%, which is the beauty of it. So December the 10th, I see 54,000 shares. I mean contracts. What I don't like, guys, is that this is starting to be 1 to 1. I like my call to put ratio to be like 1 to 5, 1 to 10. I want to see 100,000 contracts over here, like 10 over here. And I don't really see that. I see it. Okay, I see it December 17th. I see the options starting to pick up. I don't really see the unusual activity that I expected to see in Apple. So I'm really not, yeah, as you can see, I'm not really bullish on Apple. All right, unless I go out to, January. I'm really not bullish on it. Well, that's unusual. Y'all see that? For the first time, y'all can actually see what unusual options activity looks like. February 18th, there is 36,000 contracts being bought at the 180 strike of Apple. Doesn't mean that it's going to hit, but it's unusual. Like, why would somebody go all the way out to February? Look at how many contracts are being bought. Look at how many puts are being bought. The most that I see over here is 3,000. You remember how I said I want to see 1 to 5 or 1 to 10? That's what you see right here. So if I was trying to go further out, I might take a look at this particular option. If you're a little scary, that's fine. You can buy an at the money strike, hoping that it can go to 180. You're just going to have to pay more than a lot of people. Now, remember, on day 2, I teach options during webinar week. All right. I'm telling y'all, you're not going to see $65 again next year. You might as well sign up. You're going to have 30 days access to that video, even if you miss a day. Okay. So, all right, so that's Apple. We spent a lot of time on Apple because I always show Apple and the S&P 500, and then I start to breeze through your stocks. So let's go ahead and look at MTTR, Matterport. So I don't know what Matterport is, right? So when I don't know anything about a stock, I go to Yahoo Finance and I type in Matterport. So the very first thing I want to find out is how big it is. All right, it's a $6 billion stock. It's pretty bullish. Its 52-week range is $10 to $40. Okay, so it's done decent. It's down 13% today. That's not good. Let's see what it's done in the last 5 days. Well, in the last 5 days, it's been selling off. Let's see what it's done in the last month. All right, in the last month, it rose from about $19 to about $34, almost 100% return, and now it's cooling off. Guys, stocks are not going to go up forever, right? If it's going to go from 19 to 38, that's almost 100% return. People are going to start taking a little bit of profit. All right. If you're looking for stuff that are similar to it, just by pulling up Yahoo Finance, if you didn't know anything about this particular stock, they have news about it, right? Matterport delivers new and innovative solutions for the built world with AWS, all right, which is Amazon Web Services. Okay. So they must struck a deal with Amazon to do something, right? So you can always go through here and you can read different, articles about that particular company. But this is the fundamental way of looking at Matterport. I don't even care about share price. A lot of y'all care so much about share price. That's not where you make your money. You're going to make your money from the market cap. It's $6 billion. All right. So that tells me a lot. If this stock can run from 6 billion to 30 billion, you can make a decent amount of money. So looking at this chart, what's the first thing you see? It's underneath this yellow line. So what's Joel going to do? Joel ain't buying this to the upside, not on a 7 to 10 day trade. because stocks run for 7 to 10 days, then they drop 7 to 10 days, then they go up 7 to 10 days, then they drop 7 to 10 days. All right, so this is down for like what, the third day. You still got probably got about 4 days for this to drop. Joel's gonna stay away from it, but that doesn't mean that Joel can't invest in this stock. Because if I wanted to invest in this stock, what is this glaringly telling you it wants to go to? Right? Just by pulling up this chart, you know that the professionals are using these three averages. What does it look like it wants to go to? The 50-day. And as it starts to go down to the 50-day, I'm also not going to trade this until it breaks this trend. It's a trend going down. Guys, just this simple line can make y'all millions of dollars. And y'all refuse to use them. Look, look at this. Joe, when do I buy this? When it starts to go up. I've never learned to buy things as they go up. I try to catch it when it goes down because you're an amateur trader. That's why. I'm trying to teach you guys how to trade like the professionals. Professional traders trade off momentum. Professional investors will buy as it goes down. What is investing? Buying something and holding it for 12 months. Y'all hear what I just said? What's investing? Buying something as it goes down and holding it for 12 months. A lot of you guys have not figured out this concept yet. What is a trader? A trader trades off momentum. Never met a trader that can trade while things are going down. They're the worst traders on the planet. All right. I don't even affiliate myself with anybody to try to counter trend a market going up. I just don't, because it's just a matter of time before you lose. I don't do the same thing when the market's going down. All of you guys trying to catch the market going down, you getting smoked. Joel ain't getting smoked. Because if I was trading the market right now, I'm trading it down. I'm not trading it up. I'm trading it down. Otherwise, I'm sitting on hands. That's why there's a smile on my face. As an investor, though, I love to buy it as it starts to go down. But as a trader, that's a terrible strategy. Terrible. Can you make money doing that? Of course, you can make money doing anything. I can make money waking up at 2 o'clock and saying I'm going to buy Apple every day at 2:15, and I can make money. Doesn't mean that it's a sound strategy. It just means maybe for a week or two it works, but I guarantee it won't work for the next year. And I tell people that all the time. All right, so it's going down. Wait for it to go up if you're a trader. If you're an investor, buy. Buy here, buy here. If you believe in it, it's 5 billion. You think it can go to 50 billion, you just made 10 times your money. All right. All right, let's look at the next one. We got Kevin Walker. Oh, you're tagging different people. All right, we got Ty wants to look at one of my favorites, Ford. I be getting so much flack on Ford. And I'm like, guys, you know how much money I made y'all in Ford? I shouldn't even have to trade no more from the gifts that y'all need to give me from Ford, because I got y'all into Ford way down here. And I was the only one telling y'all to buy it before Kramer started telling people to buy it. Me and Demetrius Hope, we were the only two in the room. All right, because we were looking at some stocks one day, and he actually noticed a whole bunch of unusual options activity. We saw 400,000 contracts being bought 6 months from the period that we were in at that time. And that's when the light bulb went off. And I was like, yo, something is about to happen in Ford. We don't know what it is because, we don't practice insider trading. But what we can do is look at unusual options activity, and something was being stirred up. Right? So as the information started to come in, because that's what we do, Ford was going down in price for years. I kept y'all out of Ford from 2015. When I would do consultations with people that own Ford, I would say, get it out of it. Get it out of your portfolio, right? It's a losing investment until this little blue line. Let's look at this blue line with better clarity. When this little blue line started to go up sharply, and then we saw unusual options. Now, this is what, July, August? We saw unusual options activity in December. Do y'all know when they announced that they were going to have the F-150 electric vehicle? November, December. All right. And we were able to catch it legally. Why? Being in the room, fundamentally finding a stock that's been in trouble for 5, 6 years. You know, stocks are not going to go to zero. Ford is not going to zero. If Ford survived 2008, 2009 real estate crisis, it's going to survive anything else. They decided to go electric. They got the electric Mustang, they had the electric F-150. So I don't care how you felt about Ford. Stocks are not going to go to zero. At some point, they're going to start making money or going up again. It's just how business is. Real estate can drop, but I promise you, the house across the street from you, even if you don't want to buy it now and it's the ugliest house in the neighborhood, I bet you if that house was priced right, you'll buy it. You know, if somebody says you can buy this house for $10, I don't care how ugly that house is, you're going to buy it. The same thing with Ford. At some point, a stock becomes attractive, even though it's ugly for years. And it was ugly for a very, 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 very long. Look at this. This was what, 2014? It went down, it went down, it went down, it went down, and then it started to go up. And then it went higher than it's ever been. It went down, 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 down. Decided that they were going to go electric, and then it started to go up. I don't care how you feel about it. All right. If you want to make money, make money. All right. You got to take your feelings out of it. So Ford started to go up. So what is Ford doing now? What's Joel's principles? You got to ask yourself before you buy something, what would Joel do? What would Joel do in this situation? First of all, Joel's going to ask himself, if I buy this today, what's the strategy? Y'all don't be doing that. Is this a 7-day option? Is this a 17-day trade? Is this a 7-year trade? If it's a 7-year trade, do I care that it's at 19 right now? Nah, because in 7 years, chances are Ford ain't going to be a $20 stock. It might be a $100 stock. All right. Not because somebody's willing to buy $100 worth of Ford, but because what is Ford similar to? Ford is similar to GM. How big is GM? GM is an $80 billion company. Well, how big is Ford? Ford is 76. So Ford and General Motors are about the same size. Well, how big is Toyota? Toyota's 250 billion. Well, how big is Tesla? Oh, Tesla's 1 trillion. Wait. Say that again, Joel. Tesla's 1 trillion. What? They don't even sell more cars than Ford. I know. But you're coming in the room telling people you shouldn't buy Ford. That's because y'all don't know how to invest. Y'all have no clue. Because the real true investors was like, yo, I can't believe that we about to catch Ford the cheapest out of all the car companies that are doing electric, and they're only 70. And Tesla's at a trillion? 1 trillion, 70 billion. 1 trillion, 70 billion. Y'all don't even see the growth potential, like at all, because you're too consumed with this. You're too consumed with what you see on the road. You're too consumed with that Ford that you drove in college. All right. We had a Ford Mustang. I think it's still at my mother's house right now on blocks. I owned a Ford convertible Mustang in my older age, right? Do I love my Tesla that I have now more than my Ford? Of course I do. I love that Tesla that we have. But it doesn't mean that I can't invest in Ford and make enough money where I can go buy any car that I want. Y'all got to take your personal feelings for companies out if you trying to make money, but y'all don't know what to look for because y'all refuse to get educated. Y'all think y'all know everything and y'all don't. And then when I come on these videos and I try to explain to y'all that y'all don't know what you're looking at, y'all get offended or y'all say Joel is talking down on me. Nah, I'm trying to keep it real with y'all. Y'all too old. Y'all grown adults going out here gambling and throwing your money at stuff, hundreds of thousands of dollars, and y'all have no knowledge on how to do it. So that's why I sound like this because I'm tired of seeing y'all do the wrong things all the time. Doesn't mean that y'all should run out there and buy Ford. All right. It just means that if you don't know what a market capitalization is, if you don't understand beta, you shouldn't be touching any money at all. Period. Leave it to your financial planners and your mutual fund managers to manage your money because you don't know what you're doing. All right. Because you got to figure out where that stock can go to. So when you ask yourself if I'm buying Ford, you should be thinking I'm buying this because I expect this 70 billion to maybe grow to 500 billion or 300 billion, depending on your time frame. That's how true investors and true traders trade. We buy something, but we already know the goal before we even buy it. All right. So if I buy this for $75 billion, Joel is expecting it not to be better and bigger than Tesla. I get it. Ford does something totally different than what Tesla does, but Ford also has the best-selling truck on the planet that's about to go electric. So they're going to get sales of the F-150. And because the business owners are growing at a rapid rate in America, that's the first type of vehicle small businesses buy, no matter what country you live in. The Ford F-150 is like the heart. It's almost the heart of America, just like the Chevy Corvette is, and now the Tesla and Cadillac, right? And you got all of these different brands that's about to go electric. Tesla set the standard. Tesla set the standard at 1 trillion. So if Tesla is setting the standard for how much an electric car company can be, and you just saw Rivian come out with $120 billion valuation, you should be saying to yourself, maybe this stock can go from 76 billion, maybe to 3 or 400 billion. And if that happens, I can make 4 or 5 times my money. But that's not what y'all do. Y'all go in here and you say, this is $20 a share. Maybe one day it'll be $1,000 a share. And I know what I'm doing because I'm smart, because I graduated from college and I make 7 figures a year. Nah, you still can be ignorant towards the market. I don't care how much money you have, how much education you have. You still got to get educated, right? So that's why we're here to educate you. I'm not trying to force y'all into getting educated, but I kind of am because I do consultations weekly and I see the mistakes y'all are making. And I'm seeing a lot of money that y'all are leaving on the table. I don't care that you make $400,000 a year. You should have $4 million in your account. All right. If you're making $400,000 a year, you need to have 10 times your money in the bank. Some of y'all get so comfortable with your salary you don't understand what your potential is in making money. It's easy to make a 10 you it's easy to make 10 times your money on a stock. And I know I'm ranting because on these Friday sessions we decided that we were going to slow it down some and talk specifically about certain stocks. All right, I'm going to get through everybody's stock though. But you guys got to psychologically understand what you're doing and why you're doing it. All right. And don't get caught up in the presentation of it, of the information. You just got to take it in, take a deep breath, swallow, look yourself in the mirror and say, am I making these mistakes that Joel is talking about? Well, I ain't going to buy Ford because I don't want to prove Joel right. Great. Go buy Lucid. Go buy Neo. I don't care. People do it all the time. I'm just gonna go against what Joel is doing, but still do the same thing. Fine. I just want you to make money and make it the smart way because the conversations that I'm seeing in the room, I have fifth graders that understand the market a lot better than a lot of you guys that are handling 6-figure accounts. And y'all sound silly. And you don't even know how silly y'all sound because you won't get educated. All right. Anyway, so that's forward. 75 billion. I think you can make a lot of money. All right. So we have Shamika that's on. She said, "Hey fam, I'm meeting up with her later to talk about this Aruba retreat." All right. Let's look at Grow Generation. All right. We got so Grow Generation. Grow Generation is a cannabis stock. Cannabis has been 907 million. This is a $1 billion company. All right. $1 billion, guys, is literally the minimum that you should be investing in my opinion. All right. $1 billion companies can one day be 10 billion. Simple math question. Simple math. If this company goes from a billion to 10 billion, what is the stock price going to be? The answer is 150. All right. A stock's price is a direct correlation of its market cap. Some of you guys are learning that today. That's right, guys. As this starts to grow, this grows. That's why I keep telling people that Grow Generation is probably a better investment than Apple. Why? Because Apple, in order for it to grow 10 times its value, this would have to go to what, 26 trillion? It's 2 trillion now. To earn 10 times your money, Apple has to go to 26 trillion. That's crazy. So what's more than like what's realistic? A company going from a billion to 10 billion? You only need 9 billion. Or something going from 2 trillion to 20 trillion. That don't even make sense. But a lot of you guys didn't even know that. Y'all are like, well, somebody's willing to pay $1,600 a share because Tesla's $1,100. And I talk like this because that's how y'all sound. I'm gonna buy this because it can go to $16,000 a share. No, it can't. I'm gonna buy Shiba Inu because if it go to $1, I'm gonna make $10 million. It ain't going to $1. You sound real dumb right now. And I'm like, and I'm flabbergasted because I'm like, yo, I've been in this market for so long. When I hear y'all talk, I literally feel like y'all are like second and third graders that I'm talking to because that's how they think. Because y'all never got educated on the market. You're trying to do it on your own. You're trying to save some money, trying to cut corners. Or you say, F it, I'm going to take this $20,000 class. You need to not take those also. Guys, think or swim right now. And I had an argument with an educator the other day about this. Think or Swim right now has free education on everything that we're talking about right now that's at your disposal. You literally don't have to take webinar week. You literally don't have to take none of this stuff. You can go to a reputable company, the number one broker on the planet, and they have free education. Why? Because they want you to get educated. They want you to get educated. It's free. And it's a lot more educational than 99% of these teachers that's teaching y'all to market. But y'all run out there, you do, ooh, this class is $15,000. They must know what they talking about. No, they don't. Why are they charging you $15,000 for something you can get for free or something that Joel's giving you for $65? And I done proved what I can do. My family, we got millions. But you rather listen to thousandaires? That's what y'all do. All right. So what would Joel do in this situation? Joel, I'm going to vet the people that I talk to. I'm going to get the best free education that I can get first. I'm going to see the people that actually talk about the market, but are they actually buying? Are they showing you what they buy? Are they showing you their portfolios? And then I'll decide if I want to take education from them. Y'all don't do that. I heard them on the radio. I heard they was in town. I'm just gonna go and take a class. All right, ballers. I ain't got $10,000 or $15,000 to just drop on a dime just to be dropping. There ain't no party on this planet that I'll pay $10,000 to go to. I don't care if the Queen of England was there stripping. I ain't paying 10 grand, even though I got it. I'm not doing it. All right. And you guys are in this room. And that's kind of offensive to me and Noble. We're like, yo, we sitting in here teaching y'all stuff, and y'all still gonna go out and still make the same mistakes. That's on you. Look yourself in the mirror. Say, all right, I'm not educated. All right, we're gonna get through your stocks. I promise. I just had to get this out. It's been a while. All right. So grow generation. Let's talk about grow generation. It's a billion-dollar company, beta 2.75. What has it done in the last year? Gone down. That's not good. What has it done in the last 5 years? It's gone up in price. Cannabis market is not really doing that well right now because we're waiting to see what the Fed say about it. So if you were buying grow generation and you really believe in it, how would you analyze it? What would Joel do? Well, first Joel's going to ask himself, am I investing in this or am I trading? Am I investing or am I trading? Well, first of all, you got to know what investing is. Am I buying this and holding it for 12 months? Or am I holding this for 12 days? Because if I'm holding this for 12 days, I don't want to buy it as it's going down. You rookie traders, y'all killing me doing that. Traders are buyers when stocks are on fire. You want to be a buyer when a stock is on fire if you are a trader. If you are an investor, you want to be buying when people are crying. People are crying right now because it's a time to invest. Joel's investing. Joel's a millionaire. If Joel's investing, shouldn't I follow his lead? I know I don't know everything, but I listen to billionaires. Y'all listen to thousandaires. I listen to millionaires and billionaires because I want to see what they're doing. If the millionaires and the billionaires are buying, Joel's going to be buying. Because if the market falls, we all fall together. I'm going to lose with the richest people on the planet. And I'm good with that. I'm good with that. But it's been working out for me. All right. I'm not listening to thousandaires. I just don't do it anymore. I don't listen to people that don't have proven records. I don't do that no more. If you can't show me something that you bought, I'm not listening to you, period. Because there's too many people that are faking it, trying to make it. Not doing it. I'm too old for it. I ain't got time to make mistakes no more. I just don't. All right. So, grow generation. If I'm buying it as an investor, then you need to be buying it as it's going down. It's going down. Buy some today, buy some last week. It's on sale. If you believe in it, you buy it. But I'm not going to trade it because as a trade, unless it's above this each, y'all see how consistent I am? Every time I do this show, it's like a magic show because it actually is this easy, people. Y'all just make it hard. If we are underneath this yellow line, I'm not buying it. It's probably going down for 7 to 10 days. If you are a trader trying to buy something that's on, you want to be a buyer when it's on fire. It ain't on fire right now. It's being sold. And you're trying to buy it on a 7-day option, trying to catch a lucky bounce. Keep doing that. You ain't going to be in this game for 12 months. You just not. In my opinion, I ain't met nobody that can do that. And the people that claim they can do it, they ain't going to show you how they did it. They're not going to show you a proven record over 12 months because they can't do it. Look at this. This is the easiest short on the planet. This is the easiest chart to read. It went underneath the Ichimoku and then it went down. And then you're hoping and praying, but I read about it last night and it said some. All right, so you read it last night as an investment. As an investment, how long do you have to give this to be in the profit? 12 months. So don't come to me 12 days later talking about an investment you made. All right. If you bought Jumia with me, you bought it as an investment, not a trade. And some of y'all, after 2 weeks, crying right now. Why are you crying? Go buy more. Joe, this is the worst trade you ever gave. You're right, because I didn't give it to you as a trade. I gave it to you as an investment. You ain't educated. That ain't on me. Don't blame me. Blame yourself. Y'all have a real hard time blaming yourselves for stuff. Y'all want to blame me. You want to blame other educators. You want to blame that your foot's hurting. You want to blame that. Y'all blame everybody but yourself. You got to start blaming yourself if you want to be good in this game. And you got to say to yourself, dang it, I was wrong. I thought when he was talking about Jumia, I thought it was going to pop in the next couple of days because it hit the 200-day moving average. Joel is so consistent. You can go back to my webinars from 2 years ago. It's going to say the same thing. When you hit the 200-day moving average, you got to give yourself 200 days to make money. If it hits the 50-day moving average, you got to give yourself 50 days. If it hits the 20-day moving average, you got to give yourself 20 days. All right. It's underneath the Ichimoku. How many people in the room even use the Ichimoku? I ain't using the Ichimoku. It's got a funny name. All right. You don't want to make money. It's going down. Why are y'all buying this as a trade? Oh, because y'all caught these little moves right here. Okay, I get that. Y'all know how hard it is to catch this counter trend? Some of you are smart and you come in and you do this. Like, believe me, if you give me an educated reason why you do it, I'll be like, oh, okay. Some people are like, you know what, Joel? Every time it drops about 1, 2, 3 inches. I know some people that trade off of the like the size of the fall, not even like the percentage, like the inches. When it drops 3 inches, Joel, I buy it. When it drops 3 inches again, I buy it. When it drops 3 inches again, I buy it. When it drops 3 inches again, I buy it. And I'm like, man, that's a sound strategy. That sounds like something that you actually thought about before you hit the buy button. You waited, and then, that was your strategy. Smart to me. Y'all ain't doing that. That ain't what I'm getting in my consultations. All right. So, grow generation. So, as an investment, it is getting beat up. All right. 200 days angled down. If you believe in it, get in it. I might even grab some of this. All right. As a trade, it hasn't started to go back up in value yet. All right. So I wouldn't be really buying it. All right. Sandrine said, hey there. What up? AMD. Let's look at AMD. So AMD, guys, is a semiconductor company. It's similar to NVIDIA. I love NVIDIA. I would say AMD is second, in my opinion, to growth potential. Everybody's still on Intel. Intel is like for people that was trading back in the 80s and 90s. Like Intel is what Nvidia is today. So I don't really like Intel. Intel is like for your old heads. I think that Intel is like, I don't want to talk bad about Intel is like AOL, right? You can still use AOL. I still got an AOL account. But that's what Intel is. AMD is like Snapchat. Nvidia is like Facebook, right? AMD has growth potential, but they got to figure out what they're doing. But they're not as big as, Nvidia. Nvidia is still the star, but AMD is involved in everything that Nvidia is in. So it's like a baby Nvidia. But if you were buying it at the 200-day, you would have caught all of these easy moves. Hit the 200-day moving average. You gave yourself 200 days. It started winning the next day. Look at that. Let's say you say, Joel, I only want to take trades that are 60 days or longer. Fine. then buy at the 50-day moving average. You would have bought it here September, what's that, May the 25th. It was up 1, 2, 3, 4, 5, 6, 7, 8, 9. It was up 10 days later. Then it dropped and went lower, but at least for 10 days, that's all you were looking for, that little pop, maybe to that resistance area. It came down, hit the 50-day again. Joel is going to trade a little bit different. Joel likes when things hit the 50-day, but or the 20-day or the 200-day, but I'm going to put this little line on it, this little line right there. And once we break that line, if I'm trading, I want momentum to the upside. When it broke its trend to go back to the upside, Joel would have taken a shot here 50 days later. Okay. And I would have made a lot of money. All right. I had a friend telling me to buy AMD and my butt didn't do it. And he laughing at me right now. But look, hit the 50-day. You put your trend line up. I know this looks easy because it is easy. And I teach this during webinar week. Very easy trades. Trading is easy when you know what to look for, when you know what the expectations are. A lot of you guys are buying something and then in 2 days when it's losing, you're like, what's going on? And then I ask you, all right, what was the time frame to be in that trade? I don't know. How much money did you want to make on that trade? I don't know. I just bought it because somebody said it was hot. All right, so it was hot. All right, great. So were you looking to make money today, tomorrow? I just wanted it to pop. What were you wanted? What did you want it to pop to? I don't know. What? Give me a number you thought this could go to. I don't know. 1,000? Does that sound about good? And I'm like, how much money did you use? About 50K. Word? Okay. On an option? That's what y'all are doing. $50,000 in an options never took an options course. Y'all got money like that? I don't. I got it, but I ain't got money to just throw at something and gamble because I'm smart. We all smart. If you're part of the insider trading room, just to get into the room, you had to be educated, right? So I get it, but I don't have that type of money, right? So it got down to the 200-day and it looks pretty good. All right. So it's a semiconductor company. Semiconductor companies, guys, are semiconductors are the heart of all technology. So in order for your phone to work, it has a chip in it, right? That semiconductor chip is what makes it work. Electric cars, just so that they can communicate with each other, so that they can be driverless, is going to need lots of semiconductors, and it's going to have to be advanced semiconductors. There is a semiconductor shortage. Everyone knows this. So these are going to be in demand probably for the next 10 years. I wouldn't be surprised if Nvidia didn't become like the largest company on the planet with AMD right there behind it. That's how important these companies are for technology in the future. And I tell people all the time, if you don't have a semiconductor company that's part of your portfolio, I mean, I can't even really say it. Like if you're looking for like that home run hit, that's where it is. All right, because they're involved with everything: cryptocurrency, electric cars, virtual reality, the metaverse. They are the heart of all of that. So you're going to see these stocks get really, really hot. But if I wanted to make money in the next couple of days, guys, I'm not going to use the 50. I could use the 20-day. But what, before we even look at a stock, and I know we're playing Monday morning quarterback, if this is the rule, if I'm using the Ichimoku and I'm using the hour chart, before we look at any other stocks, what is the rule? What would Joel do? If we underneath the yellow line, Joel ain't buying it. Period. If we above the yellow line, I might take a shot. It's that easy. And if you just abided by that rule, you could have made money on AMD from freaking October the 6th. And you could have made money all the way up until now. This yellow line stayed going up the whole time. And now it looks like it might start going down. And now everybody wants to run into it because your boy done told you how he made money from October all the way to December. Guys, stocks are not going to run for 2, 3 years. They're going to get their little run. They're going to take a break. They're going to get their little run. Then they're going to take a break. All right. This is the most, if you watch, that's the most that it's been underneath the Ichimoku for a very long time. Well, it went underneath the Ichimoku here for about September the 28th to October the 8th. That was a 2-week period where it stayed underneath the Ichimoku. Stay away. This don't look like it want to go up in the near term. Now, please, if you're in this as an investment, please don't go sell it because I own AMD in my long-term investment portfolio. And to be honest, just by looking at its, let's go and look at its, let's look at the fundamentals. Let's pull up the fundamentals. AMD. AMD is a $172 billion company. Guys, look at the beta. The beta is 2.0. What does that mean, Joel? That means this stock on average moves 20% fluctuation. Like 20% ain't nothing for this. You see, it's down 5% today. Oh, that's why this move different from my Walmart or my Target or AT&T. Yeah, it's telling you how much it fluctuates. So if you got, let's do some quick math. If the volatility of the market is double right now, and this stock already moves 20%, what can this realistically drop? 40%. That simple. Volatility is double. It doubles the beta. The beta's already high. When this stock drops 40%, it doesn't do it because something is wrong with it. It does it because that's what it does on average. It drops 40%, grows 100, 200%, drops 40, 50%, grows 100 or 200%. That's just what this stock does. Now that I know what I'm dealing with, when I go out and I trade or invest it, I know how to approach it. So if I was buying this as an investment and I see that the 200-day is way down there, what percent away are we from the 200-day moving average? If we were here at the highs and we got all the way down to this 200-day, guys, what number do y'all see right here? What number do y'all see? 40%. All right. How did I know this? Is it just magic? Did Joel study AMD before we came on? No. It's because when you know the fundamentals and basics of the market, you know what things can do. So that when it gets there, it's like you laugh at yourself like, I already calculated that weeks ago. And then when you start seeing everybody buy at the 40% mark, it's not because all of a sudden they release the best chip on the planet. What's funny though is sometimes when it gets to the 200-day, you will see great news come out on different publications. And that's when you chuckle. You're like, okay, they planned this. They were looking at the 200-day. They knew what the beta was. They saw what the volatility was. They planned that when it got to the 200-day, because they're buying a whole bunch of it, they need this positive news to come out so that they can ensure that this pops right back up to the price that it came from. All right. Y'all see how I fundamentally and technically chop this stock up? That's what you guys should be doing. All right. Same thing. All right. So that's AMD. Let's look at SPAC. I didn't even know that SPAC had a stock. So a SPAC is a special acquisition core. So what these companies used to do is they'll take companies that need money or need funding, they'll package them in a deal, And this particular, yeah, I don't remember SPAC having a stock, but SPACs, guys, are just special acquisition corporations. And what they do is, if you can find a SPAC, it might take a couple of companies that need funding. It's kind of like it's kind of like a high end GoFundMe, and they'll take these companies, they'll put them in the SPAC, they'll help them IPO, and then that company will branch off from that special acquisition company. All right. Da, da, da. One user said, we need Elon to stop selling the Tesla shares. Yeah, so if you didn't hear it or not, Elon's been selling a lot of shares. Actually, I was watching the news the other day, and they said that we're getting the most insider selling, like, for a very, very long time. There's a lot of insiders that are selling their stocks. So if they're CEOs of these companies, they're selling their shares right now. They're cashing in on what this market has done, for the last couple of years. So be careful for next year. I actually think next year might be a very volatile one. I still think that we will end the year up, but it's gonna be it's gonna it's gonna one thing that we have that's going for us is that the government is printing $5 trillion. So the fact that the government is still printing money, we all know that the market is probably still going to be up, but it's going to be volatile and it's going to have some very, very big swings. So be careful. And I think with that printing of money, it should carry us over to the next term, whether Biden does a second term or another president comes in office. We should be good until the next term. So again, the printing of the money is what's giving me personally the confidence to still stay with the market. So we have GGPI. I don't know anything. These are some new companies I've never heard of. GGPI, Ors Guggenheim. All right, let's look this up first, because before I even look at a stock, I need to make sure that it has at least $1 billion market cap. So it has $1 billion market cap. So Gore's Guggenheim down 4% today. $1 billion company. Looks like it's been going up for the last year. 52-week range is $9 to $16. All right. So I see Polestar. I see. Oh, so I don't know what they do. I don't know why they pulled up Polestar and Beyond Meat, but maybe it's a SPAC. I don't know. But let's analyze it on the charts. It's $1 billion company, doesn't have a beta. So when I pull up this company as an investment, well, as a trade, it's hitting the 50-day. Okay, so it rose in price from this price to this price. So it looked like it rose from $10 all the way to 16. So that's a 50% return. There's nothing bad about that. What I also like is that it had a gap that was here, and that gap filled. 80% of gaps fill. It dropped in price. Now we're bouncing off the 20 and 50. When the 50 is this close to the 20, I just wait until it hits the 50. As a trader, I'm going to wait until it breaks above this line. Just not going to get into it until it breaks this line. I got room, guys. Even if it breaks here 13 and it goes to 16, that's still a decent move. I don't have to make that other dollar, you know? Oh, me and Kramer say the same thing. Anybody that says that they caught the lows are liars. Liars talk about catching lows. Y'all ain't catch them lows. You just so happen to catch that. Maybe if it hit the 50-day. All right. Catch it as it starts to come up. Because you don't know how low this can go. You have no idea. But I know once it starts to go up, is going up in price because people are buying it. And the people that are buying it, they don't want to get out here. They want to get out when it gets back up to here. They're going to be hodlers. They're going to hold on for dear life. I wish that they had created that term for stocks. I'm mad that the crypto world has taken hold of that term because a lot of you guys don't understand that holding stock is just as important, or hodling stock is the and having diamond hands is just as important as cryptocurrency. As a trade, what is it telling you? I don't even have to teach this segment no more. Y'all can teach this. It's underneath the yellow line. Joel ain't buying this. I don't care. I don't care what it's doing. Now, if you want to try to jump it, wait. Wait until it breaks that trend. That's all. That one little simple line that y'all refuse to draw. Wait for it to break back up and then buy. If it starts to go green on the John Carter, you can give yourself a chance. All right, let's look at Joseph Wright wants us to look at FSR. Okay. FSR is also an electric car company. Okay. Fisker. One of my good friends was over just yesterday. He was the first person that ever showed me he owned a Fisker Karma. So he was over yesterday talking about, investing in the market. And it was my first chance at ever seeing a hybrid electric car. So Fisker Karma came out a long time ago. If you've ever seen the Fisker Karma, let me see if I can pull it up. The Fisker Karma is a beautiful vehicle. So let me go to here. Let's put in Fisker Karma. Beautiful car, like just beautiful. Y'all see this? I mean, beautiful car. And he owned one of these, right? I wouldn't be surprised if he's in one of these pictures. But then they went bankrupt. This came out, guys, before Tesla. All right. So Fisker Karma had this beautiful car. It was slow though. It was very, very slow. Right around the time Elon Musk came out with his vehicle. All right. So now they have a new car that's coming out, and they have a new SUV, which I'm surprised I don't see any information about it. Yeah, I don't see it. All right, but they do have a new, let's see if we can see it. Nope. All right, so the new Fisker Karma looks similar to the old one, but there's an SUV also coming out that I don't see. I don't see why they're not pumping it. Whatever the case, beautiful car. It's now going to be, I think, all electric. And a lot of people are thinking about investing in it. Now, before I even invest in a company, what's the very first thing Joel is going to do? I don't buy nothing if I don't know how big it is. You got to know how big the company is. This company is $5 billion in size. That tells you a lot. It's telling you how much money you can make. If it's a $5 billion company and it grows to 20 billion, or let's just say it's 5 billion, but it grows to the size of Rivian. Well, Rivian's $100 billion company. So if I bought this right now for $17 and this company grows from 5 billion to 100 billion, how much money do I make? This is what y'all don't do. If this grew from 5 billion to 100 billion, it's going to grow 20 times its value. That means if I buy this stock and it's $18 a share and it grows 20 times its value, this stock will be a $340 stock if it ever got to the same size as Rivian. Now, if it grew to the size of Tesla, it would be a $3,000 stock. Okay. That's how you guys figure out what it can possibly do. Now, if you believe in the company, invest in it. I haven't invested in it, but looking at the 200-day moving average, let's just pull up the straight up 200. It's going to look like this. It's been going sideways. I haven't really heard any great information about it. Oh, why is this giving me the business? That's the lows. This is the highs. Okay. So it's been ranging. It's been ranging between $12.32, 12.32, 12. Actually, it's been ranging between 12, 12 and the real range is about 23. So it's been ranging between this price and this price right around the 200-day moving average. All right. People are buying it at 15, selling it at 22. Buying it around 15, selling it at 22. So if it's going down in price, probably going down to 15 until it can break. What the heck happened? Till it can break back up. Okay. 200-day is here. It's been going lower than 15. So even if it gets to the 200-day, it's probably going lower. So if you're interested in investing in it, 5 billion, you're looking at growth potential, right? Ford is, we looked at Ford earlier, it was 70 billion. I think GM was 80 billion. Rivian's 100 billion. Tesla's a trillion. This is 5. Lots of growth potential. Small cap company that can grow in value. All right. Is that all? Is that all the stocks for today? Let me check. Okay, so we're going to look at somebody said, I want SPY for the long term, but I want it to hit that 200-day. Okay. So what are they talking about? What does that even mean? What is the spiders? So the spiders is the S&P 500. All right, it's the Standard and Poor's 500, which represents the 500 largest companies on the planet. It's so popular that when you pull up Yahoo Finance, every single time you pull up Yahoo Finance, the very first thing they show y'all is the S&P 500. This is what traders and investors agree on. Traders and investors love the S&P 500 because this is what the majority of money is pretty much trying to mimic. The S&P 500 is the comp, it's the standard. It's like the gold of the market. Okay? So when you pull up the spiders, you can actually invest in the spiders. And I call it the spiders. But if you notice, it's called the spiders S&P 500 ETF. You can invest in it. Even if you invested in the S&P 500, y'all know you'll get a 1.3% dividend. You know how some of you guys are invested in CDs that are paying like 1% or 2%? The S&P 500 also pays out a dividend just to own or invest in this trust, and you get to capitalize on the profits going up. So the S&P 500 is up 26% for the year. A lot of you guys are struggling. You know, all you had to do was put your money in the S&P on January the 1st of last year. You didn't have to do anything. Let's say you had 100 grand and you said, you know what? I got my 9 to 5 every January 1st. If we have a up year, it's going to determine how much money I spend at the end of the year. Well, if you had 100 grand and you had invested it in the S&P 500 at this particular time, you would be up $27,000. And you did absolutely nothing but grow with the market. So a lot of people fundamentally who doesn't know how to use the technical side of the market, they use the 200-day moving average to know when to buy something like this on sale. Now, we talked about it earlier. So when you pull up Tesla, I'm sorry, I said Tesla. When you pull up the spiders, Tesla's on my brain. 200-day is here. So every time it hit the 200-day, not only did you buy it on sale, but then you caught it. Like let's say it was down 10%, but then ended the year up 20%. That means you caught 30% to the upside. And that's what people are doing to outperform the market. They literally are looking and seeing what that mark is January 1st, and anything under that January 1st date is on sale. And anytime it gets above it, now the market is outperforming you. So January the 1st, let's go back to January the 1st, 2020. That would put us right around here. January 1st. Oh, that's 2020. Sorry. Let's look at 2021. January 1st. If you had just done this, if you had just said, you know what, this is January the 1st, and January the 1st is coming. This was the first trading day. The first trading day of the year, the market dropped. And you know how much it dropped? It dropped about the first day of the year, the market dropped 2.7% on the very first trading day of the year. Do you know that even that 3% drop right there, if you just was able to catch it when it dropped 3% and it just got back to the price that it originally opened up, you would have made a 3% return. Some of y'all are getting 1% dividends, and you literally could have just watched this, watched the first day of the year, see if it went underneath it. And if you believed that the market was going to be up, then you could have just held on. And if you just put a line right there, that was the first of the year. Anything underneath that is on sale. Well, we were on sale for 3 days. Then we got above that mark. This became a support area once we got above it. Y'all see this? So watch this. Every time we hit the same price that we opened, it's a support area because everybody's looking at that number. Because if you can beat this number, you outperform the market. I literally could have bought this 3% down, invested in the market, and I could have at the end of the year automatically knew that I was going to outperform all money managers because all money managers are trying to outperform the S&P. So if I get a 3% jump, even if the average money manager made 27%, I'm going to be like, well, I made 30. Ha, 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 ha. I'm an advanced trader investor. Invest in my fund. And that's what you got cats that are doing. All right. But every time it dropped below it, it didn't give you enough time to buy it. Gave you like 1-2 days. So the market was only down 3%, I think, at the most. Let's see. Then it went up and then it came down again and gave you a chance. Look at how many times it came back to the same price that it opened. And then it took off. Took off. Y'all see that? Took off. Never came back until never came back. The market was only down 3% for the very first day. That was the lowest that the market had seen the whole entire year. That's crazy. But if you missed it, you could have said, you know what? Maybe I can get it at the 200-day. But you missed it. Dang, it never touched the 200-day for the whole year. So what's the next average that it can get to? Well, if it didn't touch the 200-day, maybe I can get it when it touches the 50-day. So you go back to January. This was the first day of the market opening. And then it gave you a chance to get in at the 50-day. Remember, investing and trading is easy. Y'all make it hard. Then you caught it here at the 50-day. And you caught it at the same price that it bought. Because see, these people didn't want to, when it started to drop in price, the cats that didn't see it go up, they're like, you ain't about to leave me. Our fund about to invest in the market too, so we can be up 25 or 30%. Imagine investing in January, February, and you didn't have to do anything else for the next 10 months. Your life was just easy for 10 months. Then at the end of the year, you cashed out your 25K. Maybe you lived off of that 25K. Reinvest that $100,000 and try to do the same thing all over again. And that's your job. Some of you right now make or have $100,000, but you might make $25,000 a year. And here you are working 9 to 5s. You could be creating your business that you want. All right. For you entrepreneurs that are out there. But you could have caught it at the 50 day. How many times did it give you a chance to catch it at the 50 day? Once, twice, 3 times, 4 times, 5. Y'all see this? 6, 7. And guess where we're at right now? The 50 day. It won 7 times in a row. Never lost if you went 50 days out. And then you wonder why I say investing and trading is easy. Y'all make it hard. Investing and trading is so simple, but y'all complicate it by listening to the wrong people, taking too much information, using 57 indicators, not understanding the fundamental basis of the market and price action. Y'all got to learn the fundamentals first. You got to learn how to dribble first. You got to learn how to keep that elbow up when you're shooting first. All right, swimmers, you got to learn how to hold the water and push it behind you to make you go forward. If you don't know the fundamentals, you're not gonna do well in this game. All right, you're just not, in my opinion. All right. So I did that. I wanted to wait for some other stocks, show them ZM for fun. All right. So Noble's on. I think he's still on. So Noble wants me to show y'all Zoom. All right. So let's look at Zoom. Zoom as an investment, what would Joel do? What would Joel do as an investment? Joel's going to look at the 200 day. He's going to say, are we underneath it? He's going to look and see how big Zoom is. Before I even buy Zoom, I don't give a damn about $180 a share. I don't care about that. It can be $18,000 a share. I don't care because I can buy any amount of Zoom that I want. I can create my own share price with the Robin Hoods that are out there, the Fidelities that are out there, the Cash App that's out there. You don't have to worry about stock price anymore. If you want to buy Amazon, you can go buy Amazon today for $10 if you want to buy some of it. But I need to know how big it is because that's where I make my money. So I pull up Zoom. And I notice that it's $50 billion. Now, what is Zoom similar to? You know, when I buy a stock like this, I kind of want to know what it's compared to, something that is similar to, because I got to kind of know if it has growth potential, which it has a negative beta, which isn't good. What is it similar to? So I know it's similar to maybe a Cisco Systems. How big is Cisco? I don't know. 235 billion. Okay. Cisco is 235 billion. Zoom 50. All right. But it's got a negative beta. I don't like that. But let's see what it's done for the last year. If money's been pouring out of it for a year, Joe typically wants to stay away. 5 years though, it grew from 79 billion to 460. Now it's 180. It's falling in price. Why is it falling in price? Let's think about fundamentally what's happening. Why did Zoom go up in the first place? Because we were sitting at home during a pandemic. We had to conduct business using Zoom. The 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 stock market is a forward moving asset, right? We buy stocks based off of what we think the future growth is going to be. Well, what if all of its growth came during the pandemic? They got over, I'm just throwing a number out, 50 million users, right? And then all of a sudden, the pandemic didn't go away, but people started to go back to work and people stopped using Zoom as much. Well, the growth rate that we thought Zoom was going to continue on isn't going to continue anymore because we're now not sitting at home. And that's what's happening in Zoom right now. It got most of its growth potential in 1 year. When you see a stock go from $76 a share all the way to 460, guys, it grew 5 times its size in 1 year. 5 times. That means this was a $10 billion company that grew to 50 billion. Well, I'm sorry, 50 is where it's at right now. So those numbers are incorrect. It went from 75 billion to 460. Still crazy. If it was at one, when it was 460, it was roughly about a little bit over $100 billion in size. And if it grew 5 times its value, it went from a $20 billion company, 15 to 20 billion, all the way to 100 billion in one single year. Most stocks that are that big don't grow that fast. So people are going to start taking profits. That's why you're going to see these big swings. As an investment, I personally I still like it because I think Zoom is still here to stay, but you definitely want to invest in this for the long term, 1, 5, 10 years. Let's see what it's doing short term, because short term, even looking at the 200-day, it's still going down. Why are y'all buying this to the upside as a trade? Because you're using the wrong charts. That's why. This is going down. Even if I was using the hour chart, before we even look at this, if Joel sees this underneath that ugly yellow line that y'all don't like, I ain't buying it. Period. If it's above it, then maybe there's a trend going to the upside. Because remember, buyers buy things that are on fire. Investors are going to buy when people are crying. People are crying right now. So you got your investors investing in this, not your traders. Your traders are shorting this. They ain't trading it to the upside because they're going with momentum. So when I pull up this Ichimoku, if we underneath that yellow line, 7 to 14 days minimum. So when I pull it up and you see what your stock is doing, you're going to realize, oh, this thing was bullish lately. All right. So now Zoom was bearish on 12 December the 3rd. All right. What's today's date? December the Hold up. Says, oh, this is the minute chart. Looking at the wrong chart. Sorry about that. That was today. All right. Here we go. And the 1 minute chart works the same way. Zoom was underneath the 200-day, and then it got underneath this yellow line. Joel ain't buying this if it's underneath this yellow line. I might take a shot right here. I might take a shot right here. But then once it gets back underneath this yellow line, Joel has to stay away. Stay away, 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 stay away. Maybe if we get above here. Nope. Stay away, stay away, stay away, stay away, stay away, stay away, stay away. Joel keeps it simple. If you had just kept it simple, you would have saved yourself some money. All right. That was Zoom. All right, let's look at Go EV. All right, so Go EV. Go EV. Dang, y'all put out these stocks a long time ago. I'm sorry. Go EV is an EV company. Oh, actually, it's not. This is Canoe Inc. Maybe it is. Maybe it's not. I don't know. Let's pull it up on Yahoo Finance. Go EV. Canoe. $2 billion company. Beta is very, very low. Don't know why. But look at the 52-week range. Anytime you see a discrepancy between the beta and the 52-week range, go with the 52-week range because it actually grew 5 times its value. It went from $5 to 24 for some reason. 1 year chart bearish, Joel's gonna stay away. 5 year chart, Joel's gonna stay away. Just just by that look, I'm like, I don't like what I see already. All right. But okay, so it is involved in EVs. So the EV roundup, you see they're talking about FUV and GOEV, show dismal quarter 3. You see they're talking about Fisker and XPEV. So even if you were looking for other companies that were similar to it, this is how you do it. All right. So once I figured out the market cap, Fisker was 5, this is 2, 4 to 70, Rivian's 100. You see how I'm learning these numbers and they stay with me? Now I'm gonna go analyze it here. As a trade, as a trade, Joel's gonna stay away. Why are y'all buying this to the upside? It ain't even near this yellow line. If you're going to say I'm gonna go against what you're saying, Joel, fine. Has it broken above this line yet? If the answer is no, Joel ain't buying it. Why? Because traders, they're buyers when things are on fire. This ain't on fire. I want to buy when this thing is flying to the upside. It's not doing that yet. We don't know how low this can go. So we're going to wait. We're going to wait. We're going to be waiters this time. This time around when you guys trade in 2022, you're going to be way more patient than you were before. You're going to study a stock, but you're going to learn how to be patient. All right? Because the patience is what's going to make you guys the money. I get if you caught it right here and that bad boy moves, you can make a ridiculous amount of money. But trying to catch this low right here, you're going to be doing that for the rest of your life. All right. Buyers buy things that are on fire. Investors are going to buy when people are crying. You're buying when people are crying. You got to know if you're investing or trading. An investment is going to be 12 months or longer. Joel's not going to buy this as a trade. Joel ain't going to buy this as no investment. Why do I have to buy this as an investment when I can go buy? I don't really like the charts. The 200-day is angled down. If you buy it, you could buy it here. Why would I buy that when I can buy ugly? I mean, I think Charge Point looks just as bad. Charge Point at least broke this trend. It's still in the electric car space. It's still an electric charging station. Why buy that company? That company's charts might start looking a little bit better, but I don't have to at that particular time. As an investment, would I buy this? Yeah, I've been buying it. You know, as a trade, you're not going to catch me out there trading Charge Point right now. Why? Because it's underneath this Ichimoku. We don't know how low this can go. We don't know. And all I got to do is put a simple line here. And guys, the trend is your friend until it ends. The trend is down. The trend is your friend until it breaks that trend back to the upside. Okay. All right. Someone said, preach. You should have taught MAs in high school, moving average in high schools. I'm teaching it in high schools now, a days, and in private schools. Actually, not even high schools. Private schools are hiring me to teach their youth because you still haven't used the Pythagorean theorem. I know. All right. That's hilarious. Somebody wants us to look at coin. We still got a little bit of time. It's 147. I'm not completely out of energy yet. All right, Coinbase. But y'all quit trying to get me to look, guys. I'm an investor. All right. So when I buy cryptocurrency, y'all keep talking about the fees. I don't care about fees. I pay fees one time. I don't care about fees in crypto. All right, because I'm not day trading it. If I want to day trade something, I'll use Binance, I'll use Coinbase Pro. Like, please stop getting on me because I buy my stuff on Coinbase and then I put it in the vault. All right, I'm using Coinbase because whether y'all notice or not, it's still the most secured cryptocurrency brokerage that's out there. It just is. That's just facts. Yes. Are there people in the room that have had their money stolen on Coinbase? Yes. I haven't heard one individual on this planet that got their money stolen when they had it in a vault on Coinbase. My money is in a vault. That means it's stored, secured, which is offline, right? The reason why your money is even being able to be stolen in the crypto space is just like having money in your wallet. If I put my money in a wallet and put it in my back pocket and I went to a party, that's how it is when you guys are using Coinbase or any broker right now. So it's secure in your pocket, but you can get pickpocketed. So if you're trading it, I get it. I would trade it and then watch it, or you just need to hawk your money if you're trading it. But if you're investing and you don't store it in a vault, when you store it in a vault, it's literally like storing it in a vault. A pickpocketer can't steal your coins unless they break into your house. They know the codes to get into, the house and into your room and then steal it from your vault. Like it's super, super secured. So Coinbase is probably one of the only stocks that are out there. I'm sorry, cryptocurrency brokers that are out there that actually have stock, right? So you can buy Coinbase Global and you can invest in the most secured broker that's out there. And I'm gonna have people holler and be like, Joe, you're wrong, and blah blah. Okay, whatever, fine. I know y'all talk about crypto.com and Voyager and uh all of these other KuCoin and all these other different you know Binance, all these different brokers that are out there. I get it. Everybody's gonna claim Gemini, everybody's gonna claim to be the best. But I'm sorry, Coinbase is the most secured and it's the only one with a stock. I might be wrong. If I'm wrong, correct me if I'm wrong. So you can invest in the coin, you can invest in the broker and not actually be invested in the crypto. You're still invested in the crypto space, but a lot of people that aren't able to buy cryptocurrency in their 401ks or their IRAs are able to buy Coinbase in their IRA. And I believe there's certain mutual funds that are starting to add Coinbase to their funds so that when you're buying this Vanguard or some mutual fund through your 401k, they might have some exposure to Coinbase. But anyway, on the 1 hour chart, Coinbase is going down. So if Coinbase is going down, crypto is probably going down. If I was trading this, I would stay away for a while. Just chill. You ain't got to make money every day on Coinbase. It's going down. But if I was an investor, what do I see? I see it bouncing off the 50 days, giving me a chance. Some of you are like, well, Joel, why doesn't it have a 200 day? It doesn't have a 200 day because it hasn't been out for that long. It IPO'd in April of this year. IPO is an initial public offering when a company offers shares to the public and you can invest in that company. So it became investable April. It's been holding this support line. See here, it's been holding this support line. So it looks like it wants to hit this support line. I'm going to go ahead and set myself an alert. Go ahead and if it gets there, I might add to the position that I already have. But as an investment, buy it. How big is Coinbase? Let's go through the process. Coinbase is a $68 billion broker. I'm pulling up coin stats right now. Why do y'all think I bought crypto.com the other day? Y'all thought I bought it because they bought a stadium or put their name on a stadium somewhere in California, I believe. Nah. I bought crypto.com because crypto.com is a broker. I looked up and said, well, how big are all of these different brokers, right? Coinbase is a brokerage. It's 68 billion. I looked up Binance, and the Binance coin, guys, is the third largest cryptocurrency out there. So I looked up the coin info there, and I noticed that the market cap was 100 billion. Y'all know that there's another broker out there that's actually bigger in market cap than Coinbase? It's called Binance. A lot of y'all don't even know it. So then I looked up crypto.com, and I noticed that crypto.com was 16 billion in size. So I was like, hold up, 16 billion. Took out my calculator, and I said, well, if if Binance coin is 116 billion and crypto.com is growing really, really fast and everybody's talking about it, and it can grow to $100 billion from 16, how much money can I make? I can make 6 times my money. Well, Joe, what does that mean? That means if I put in $1, it's going to grow to 6. Well, that's not breaking the bank, Joel. Right? But if I put 10,000 in, it can go to 60,000. If I put 1,000 in, it can grow to 6,000. So hold up, Joel. You mean to tell me this can't go to $50,000 with my $100 investment like my Shiba did? I'm like, nah, because it's already $16 billion in size. It's already 16 billion. Can it grow to 100? Can it grow to a trillion? Yeah, it could. Is there something out there that's $1 trillion in size? Yeah, Bitcoin. How do you know this? Well, when I pulled it up on Yahoo Finance and I typed in Bitcoin, it says here that Bitcoin is $1 trillion in size. Did y'all even know that? Joe, Bitcoin is fake money. Word? This says $1 trillion. What did your uncle say it was worth? 0? This says $1 trillion. Oh, that's just the value that they gave it. No, it's not. I converted actual dollars into Bitcoin. That was real money that was converted over. Somebody out using the yen converted their yen, real money, into Bitcoin. That's how you even got this value. So anybody telling y'all that it's fake money is probably 1,000 there that don't know what the hell they talking about. They don't. And they losing you money because of their fear of the market. Because everybody said that it was fake. Because Jamie Dimon, who runs the largest bank in America, told you that it was fake. Mind you, they creating a cryptocurrency. I think they created the USDC coin. Right? It's just noise. You listening to I guess you was listening to a billionaire. So I get it. But he also represents the dollar. Why would I want this other thing that's supposed to supplant me? Why would I want it to grow? I'm going to talk crap about it. Right? That's what people do. All right. You got to know who you dealing with and why they're saying what they're saying. And then you got to look and see what they're doing behind closed doors. Because behind closed doors, they creating their own crypto. All right. But Bitcoin's worth $1 trillion. And they actually now are allowing people that are Jamie Dimon's with who? JP Morgan. They're letting JP Morgan clients now be able to take custody of Bitcoin, right? Full, 180 degrees. You got to know who to listen to. You got Munger out there talking bad about it because Munger mad because he ain't make money on it. He got sour grapes. Anybody that's talking crap about a certain asset, I guarantee they talking crap about it because they ain't make money. Munger and Buffett didn't invest in Tesla. They didn't invest in Microsoft. They didn't invest in Google. They didn't invest in Facebook. They didn't invest in Amazon. They didn't invest in any of these companies that are all at the top right now. The only one that they invested in was Apple, and they were pretty much forced to do it. And that's the only reason why they're doing very well right now. I love Buffett, but Buffett's too old now. He don't understand what the market is doing and where it's going. And they're comfortable. They ain't got to invest the way that Buffett can be considered one of the greatest investors of all time, but he ain't the richest man on the planet. That's Elon Musk with Tesla. All right. Things have changed. Money has changed. Things have shifted. And if you want to make money in this game, you got to shift with it. You got to understand it. Even if you don't believe in it, you got to at least understand it. All right. All right. So Charles says that there's 33,000 volume on the Apple 180 call February the 22nd. So what does that mean? All right. It's an option. It's options that we're talking about. Options is something that I teach during webinar week this coming, not next week, but the week after. I already got about 20 people, I think, signed up. So again, it's going to be a packed house. Sign up, learn during the Christmas break. You're going to have friends and family over. I don't care if y'all put 50 people in a room and y'all pay one time and get 50 people to learn the fundamental basics of the market. Do what you got to do. Don't tell me, but do what you got to do. All right. But let's look at that. Let's look at that trade. So let's go straight to options. We're going to type in Apple. Let's look at all products. Let's look at what did he say? 33,000 volume on Apple. Oh, February. So we're going to go all the way out to February. Oh, we're at February. Oh, this is what we talked about earlier. Yeah, 33,000 volume, February 22nd. Unusual options activity. Very, very, very unusual. Cool. Somebody said that I guess something that we were looking at earlier was a player in the metaverse. Oh, okay. GGPI is the SPAC introducing. Oh, Polestar. Oh man, guys, I don't know if y'all have seen the Polestar. Man, I'm so excited about electric cars because I own two. Well, I own one and a half. I've owned four in my lifetime. All right, so my I-8 is like it does electric for like 25 miles. So I can drive to the expressway electric and then I flip it over into sport mode and then the gas kicks in. All right, but then when I get off the highway, I put it right back in electric cuz there's no reason for me to be driving all crazy. But also when I'm driving the I-8, a lot of people don't notice my car charges when I have it in sport mode when I'm on the highway. So like let's say I use 10 or 15 miles of electric and then I get on the highway, I can put it in sport mode and the sport mode charges the battery. So then when I get off the expressway, I can replenish the same miles that I just used earlier. But am I going to use more gas? Of course I am, but it's going to charge the battery and I love the technology behind it. As you can see, I'm a geek. But Polestar, guys, this car is beautiful. All right, let's look at it. We were looking at the Fisker Karma earlier. Let's look at the Polestar. I hope no porn pop up. Polestar. Hold on, let me make sure I type this correctly. Polestar EV. All right, so the Polestar, beautiful car. All right, coming out all electric. It's going to be expensive, but they used a SPAC in order to introduce the company to the public so that they can go public one day and they can be like a Rivian. But it's a beautiful car, you know. I've been looking at it, it looks kind of like the Audi, but there's some good specs behind this particular vehicle that I think you guys would like. All right, let's look at and GGPI is the company that's going to introduce that particular SPAC. Let's look at Pfizer. So we didn't talk about any coronavirus stocks today. So let's talk about Pfizer. Pfizer as a investment and trade has been making y'all a killing. Pfizer is sitting at all-time highs. I think it hit it like 4 days ago. This is crazy. This is absolutely bananas. But check this out. You could have when this started to go down in value. This is why I don't just buy it when it hits the 50-day. When it hits the 50-day, let that bad boy go down, and then once it starts to go up, it starts to go green on the John Carter, then you can take a shot at it. Okay? Still going to go 200. I'm still expecting 200 days of profit, right? So then it starts to go up in value, up in value. I don't see why anybody is getting out of this particular stock. It has not broken its trend to the upside. Y'all see that? It's just going up in a channel. That's what you want to see. That is a bullish stock. Is it bullish right now, or is it? Because see, when it sells off like this, guys, you don't see that on a day chart. On a day chart, you know what my brain is saying? 6 to 7 days up, 6 to 7 days down, 6 to 7 days up, 6 to 7 days down, 6 to 7 days up, 6 to 7 days down, 6 to 7 days up, 6 to 7 days down. That's what my brain sees. You can't see that until you become I wouldn't even say a professional, but just educated. So for now, you got to be able to pull up maybe an hour chart. And if you're trading this, as long, what did Joel say? As long as this bad boy is above this yellow line, you can take a shot. If this yellow line is moving up and it's above this yellow line, you can take a shot. Let's erase all this stuff. You can take a shot. You can take a shot. But if it gets below that red line, like I wouldn't have bought it down here, even though it popped, but I sure would have probably got in right back there. And you would have made money because stocks stair step. They don't just go up in a straight line. They scare you, they pull back. But this yellow line gives you the confidence to buy these pullbacks. It gives you the confidence to buy the pullbacks. And I know counter trend traders, guys, that will buy it when it goes up and then they'll have a support area where it comes down. That's not counter trending. All right. I want to make sure y'all understand that. Counter trending is not buying something on a pullback. Counter trending is buying something that's doing this. And then you decide, it looked like it's too low. I think I'm going to buy it to the upside today. Feels like a good day. It's sunny outside. I think I'm going to buy it. I think today is the day it's going to change. Guys, that's gambling. That's gambling. All right. It can be a sunny day, but if it ain't a sunny day and we above this yellow line, Joel ain't buying it. It can be a rainy day. And if we above this yellow line, Joel's buying. It could be a effed up day. Buy it when it starts to get momentum to the upside. It broke a trend. It broke above the Ichimoku. You got a shot that it can probably run for 7 to 10 days. Give yourself a chance. What is it doing right now? Right now, I would still say it's bullish. If you took a shot right here, I'm not going to bite your head off. I'm not. But if that bad boy's sitting down here, I'm going to be like, guys, it's underneath the yellow line. The yellow line looks like it's dropping. We hit a high. We tried to hit that high again. It's rolling over. You can take a shot here. If you lose, guys, lose small, lose quick. 7 to 10 days. All right, it's going sideways right now. It's trying to figure out what it wants to do, and then it's going to make another move. But I mean, we already at all-time highs, which is crazy. Since we're looking at Pfizer, let's go ahead and look at Moderna. 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 What is it doing short term? Guys, stay away. Wednesday, it got underneath the Ichimoku, and it didn't pop back up. Thursday, it stayed under Friday. That's 3 days. Probably got 4 more days. It's going to drop. If you want to jump it, I get it. I see it going up here, down here. You might want to get in. I get that. Make sure it broke this trend line. It broke it. Some of you guys are losing right now. So what? You lose. If you lose, you lose. Right? The best traders in the world are going to have about a 75% winning percentage. not 99% like your super traders say that they have. Ain't nobody out there winning 99% of the time unless they're investing. Ain't no traders winning 99% of the time. They're lying to you straight to your face and taking your money and not showing you their trades. I got a book of trades over here, but I can't find it today. But I've been winning about 95%. And you looking in their eyes and they not flinching. And you're like, I guess I can trust what they're saying because nobody would buy their products if they were lying. That's because nobody got the balls to be like, I don't believe you. Because then what would they do? Well, I'm gonna kick you out of my room. No, 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 don't do that. I want to be here because I need to make this money. I believe you. That's how a lot of you guys operate. All right. Stop doing it. All right. For somebody said, Dre said that Ford is aiming to be the top two EV player by 2025. I love to hear that because Joel is invested heavily in Ford. Heavily. And anybody that doubts my investment in Ford, all right, put up a short. You believe Ford's going down? Short it. I bet you won't short it. You won't short it, but you don't want Joel to win. That's called hate. All right. All right. The VIX just hit 33. Whoo-wee. Something is happening right now. The VIX just hit 33. Y'all see how we got that alert? Y'all should have alerts just like that. So let's go to the volatility index. For you guys that don't know, live, the volatility index is the fear index. Let's go to the month chart. The volatility index is the fear index. When it gets above 30, just like it did, I can look up and I bet you the market is sliding. I ain't even got to look at the market to know that it's selling off really hard right now because this represents fear. What do we want this to pop to? Y'all don't even realize I'm happy the market's selling off. I'm like, finally. And most of y'all are like, Joe, that makes who wants to lose money? Who likes posting $16,000 and $20,000 losses in their investment accounts? I'm not cashing it out right now. I'm cashing it out 10 years from now. I don't care about that account. What it's doing day to day. Just like Kathy Woods. Y'all swear she's like, oh my God, oh my God. Her fund was up 100% in the last 2 years. You think she care if she's down 30? She's still outperforming the S&P. She averaging 40% a year. She don't care because she's trying to hit that home run. Well, guys, this is going up and the trend looks like it wants to continue going up. Y'all know you can look at the VIX and you can also put, I don't know why I got to keep doing that. That's making me mad. The VIX using the Ichimoku is trending up. That's another reason why Joel just stayed away and said, I'm not going to trade that much in the next couple of weeks. The only trade that made you money in the last week was Apple. If you was trading anything other than Apple, you lost money. Period. There were no other trades. And anybody that was trading, unless you were shorting, that's the only reason why you were making money. Why? Because short term, we got about a 7 to 10 day move where the market just looks like it just wants to sell off. And that's healthy. It's healthy for the market to sell off. It's at 34. All right, so I'm gonna show y'all something. I should do a class on this and charge y'all $10,000 for. Now, if y'all had taken $10,000 and you said, "Man, I learned everything about the VIX," I actually would have said that was a good investment. You just took a $10,000 class and for 2 hours they just taught you the volatility index. I'm gonna be like, that's a smart individual. That's a smart person that gave you that class. They overcharged you. But that $10,000 investment that you just used to learn the volatility index is going to make you millions in the future. Some of you guys are lucky for being on today. All right, because we don't always show this. This usually finds its way in our webinars. But luckily, you guys were able to see the alert go off today, live. This looks like it wants to run to here. Anybody that's investing, you want to invest, but we might be going lower. because we already hit 40 early this year. I already have my alerts set. Y'all see these alerts? These alerts are set to tell me when to go in on the market, and I'm licking my chops. I can't wait. I've been waiting for the market to sell off for the longest, even during the Christmas rally. I got a bunch of money sitting on the side for options trades. I'm about to take 5 to 6 months out. And 6 months from now, when I start showing y'all my receipts from my options, y'all are gonna be surprised. Like, when did he talk about buying this? Joel, you always talk about buying stuff after the fact. And I just laughed to myself. And I'm like, oh, okay, they just came into they just been part of this room for like 2 weeks. Or they didn't watch the Friday video where I was telling them when I wanted to buy, or how I was buying, or why I was buying. But this looks like it wants to go to 40. And if for any reason we get to 50, Joel ain't even trading. If we get to 50, I'm literally trying to find I might sell some of my cryptocurrency to invest in some of these options. Like dead serious. Because the amount of money that you can make when the market hits 40 or 50 in the options market is absolutely obscene. It's obscene. It's cryptocurrency and stock on steroids. We showed you guys a Moderna trade, I think, a week or two ago that was up 20,000% in a day. You don't get those types of gains in the crypto market. You get those types of gains in the options market, which is the ultimate trading and investing tool. So we're setting ourselves up. And it looks like it broke this trend to the downside, and it was boring. You remember how boring the market was? It wasn't doing nothing. The only thing that was going up was AMC and GameStop. Well, now everything's on sale. And it looks like everything's going to continue to drop, at least until we get this. Might be it. This might be the last Friday, and then the Christmas rally starts. You never know at the market. I could be completely wrong, but I told everybody that we probably was going to see 30 or 40 because we were sitting down here at 16, 17 for too long. Now that the Omicron has come out, it's striking fear in people's heart, and people are starting to take profits for the end of the year. People are saying to themselves, should I take profits now and pay taxes on it? Or should I hold it until next year and then try to pay taxes on the 2022 year? That's how the rich are thinking, if you really wanted to know. That's what a lot of my friends are calling me and doing consultations. They're like, Joel, I'm sitting on all this money. Like, should I should I take the profit? Or Joel, I'm losing big. Should I go ahead and use this as far as my write off on my business? And I'm like, yeah, that's the beautiful thing about the stock market too. Even when you're doing bad, it's good because I can write that off. I can write those losses off against my total income. But the VIX is starting to move, so be careful. All right. Let's look at Walmart real quick. Walmart. Walmart. Call me the Walmart of classes. I don't know if I should take that as a compliment, or because I forgot their actual name. Are they called the Walmarts? No, they're called well, whatever the case, the family have been billionaires forever. So even though their product is cheap, they're still rich. So, like I said, if I'm the Walmart of education, is that a compliment or is that a slap in my back? I don't know. I'm rambling now, but let's look at the 200 day. I love buying Walmart when it hits the 200 day. It's almost clockwork, a great investment. I love buying Walmart when it hits the 200 day. Walmart does well during, the pandemic. But Walmart has some major support right here. All it's been doing is fluctuating between that price, 150, 130. 150, 130, 150, 130, 150, 130, 150, 130. You're at the lower end of it. Even if it drops from 130 to 126, I think it's a buying opportunity, especially for your investors. But you better go 6 to 12 months out. So even if you are looking at options, let's see if we see any unusual options activity in Walmart. I don't see any. Yeah, there's some in December 17th. Yeah, it's unusual. Look, 7,000 contracts, guys. This is unusual. 8,000 contracts are being bought at the 140 strike in Walmart. I know that's only $3 from now, but Walmart has low beta, so a $3 move is like huge. It's still $300 per se per contract. Um, if you're buying deep in the money, you should get a higher return on your investment if you go out of the money. But there's some decent volume right there. I would probably go all the way out to the the December 23rd options are $300. This is 150. Why not give yourself another week and pay double? You know, you can even be a little bit more safer if you just buy it at the money at 137. Okay. But Joel will probably go out. I'll probably try to, I'm scary, right? I'm going to try to go all the way out here to January. Still unusual. 330, which isn't bad. February, March. Oh, I might buy this one. This is the one I would buy. I would go all the way out to March. I would buy this option for 580 at the 140 strike. And I'm going to give myself a lot of time. Even that option today, let's say you bought that option today. Let's see how much those options are up. Guys, y'all see how this March option in one day, a March option in one day on a 1% move is up 30%, 20%. And I went all the way out to March and I'm up 25%. Some of you guys don't get a 25% move on Walmart the whole year. You just got it in one day and you took an option out in March and wasn't even really that aggressive. That's how you make money in the option. Okay. Y'all be killing me with Ford found on the road dead. fix or replace daily. 100% return in 8 months. Yep. That's Ford that we were talking about earlier. Hey, let's look at somebody said that their team their team GM, team Chevy. Look, I love cars, right? I love Corvettes, I love Cadillacs, I love Teslas, I love BMWs. I've owned a Porsche. I've owned just about every car company known to man. The only car that I've never owned was a Mercedes. I don't know why. I just haven't. I know the reason why. Mercedes is an expensive brand and I like speed. So if I'm going to buy a Mercedes, it's going to be an AMG version. And usually AMG versions are like 100K or higher. That's probably the only reason why I haven't owned a Mercedes because I personally don't believe in paying for any. I've gotten close to 100K as far as for the cost of a car, but I'm not gonna go over 100K unless it's that Hummer EV. I like that joint. Uh, so let's look at PayPal. All right, I'm really interested in PayPal. All the pundits are talking about PayPal, so I feel a little bit more confident because when I started talking about PayPal way up here at the 200 day, I was loading the boat way up here because I'm buying it as an investment. I really, really, really love PayPal. I believe they know what they're doing. They're involved with fintech. Fintech is going to explode in value in the future. Everyone's using e-commerce for everything, including business. They're getting into the crypto space. Once they integrate crypto in it, it's going to do well. So I really like PayPal. Very innovative company. If you use Venmo, Venmo is PayPal, right? I use PayPal. If you are trying to register for webinar week, then you're going to use PayPal. right, to log in. So I really, really like PayPal. But PayPal has gotten beat up. But I want to show y'all something. PayPal does not give you opportunities to buy it 40% off. It just doesn't. It has a pretty decent beta, but the stock is down. Let me pull up a month chart. Let me erase everything that you see. All right. PayPal was a $310 stock. That bad boy dropped from 310. It's down 42%. Now, let's talk about this. What is the easiest? Some of you guys, when you first start investing in the stock market, the first thing that even gets you any type of respect as an investor or a trader is to earn 100% return. Once you get that first 100% return, you get to you get to be included with the real traders and investors, but not until you get that 100%. So what I want every newbie to try to do is I want you to try to hold a stock, hold a crypto long enough to get to that 100%. And we're going to have 100% club in the room. Once you make that 100% club, you're considered, you can luck up and get it. But you're you kind of know what you're doing. You had the to be able to hold something long enough to be able to get it. Now, once you get that 100% return in your stock, the next thing to try to do is to try to get 100%, faster. So maybe sometimes it might take you 3 years to get 100%. Then it might take you 1 year to get 100%. Then it might take you 1 month to get 100% return. Then you start trading options and you start getting 100% every day. But for now, the easiest way to get 100% return in a stock is to find a stock that's down 50%. I'm going to say that again. The easiest way to get 100% return is to find a stock that's down 50%. The easiest way to get a 100% return is to find a stock that's legitimate, that's fundamentally good, that's down 50%. Why? Because when a stock drops 50%, meaning half its value, when it grows back to the same value that it came from, it doubles in price. If a stock was $100 a share and it drops to $50 a share, yes, it lost 50%, but it doubles to get right back to 100. It's the fastest and easiest way to get 100% return. PayPal right now is down 42%. Some of you are going to get your first 100% return just by investing in PayPal. And you should be able to get it. I wouldn't say fast. It might take a year. It might take 2 years. I don't know. PayPal might go through a bear market and it might sit at one price for 2 years and then decide to grow 5 times its value in the future. All right. But that's what investors kind of look for, number wise. When it's down 42%, I am licking my chops because I'm like, yo, if whatever amount of money I throw into it, I can double it. If I throw 100 grand at it, it's probably going to make 100 grand. All right. I throw 10 grand at it. It's probably going to make me 10 grand. All right. Sometimes it happens way faster than I thought it was going to happen. So not only do I buy the stock hoping that it can make 100% return, I start buying options too, because if I can get 100% return on the stock, do you know what I can get in the options market? Obscene. Y'all are all caught up in crypto. Y'all have no idea what you can make in the options market. I'm looking at PayPal like it's the best cryptocurrency ever created, because that's the type of gains you can get in the options market. It's just obscene. So what am I looking for? I'm looking for unusual options activity way out. I think I was buying options way out in April. That's right, April. I was going all the way out to April. Maybe it was May. Maybe it was June. Where was I? There it goes. I was going all the way out to June. And you don't necessarily have to buy a $250 strike. If you have the money and you want to keep it simple, you better pony up and pay that $2,300. If you don't want to pony up the $2,300, then you best buy a vertical. Guys, the verticals are like $300. All right. And you're giving yourself out to June. And even if I bought this and I only had 300, or let's say I've spent $3,000, even if I spent $3,000, I can make 100% return just off the options. Okay. This is a test account, guys. This isn't my real account. So even if I put 3,000 in it, I can make 100% return as long as this option or this stock is higher than the price that it is right now in June. I'll take that bet all day long. Why? Because we already 40% down. Even if it dropped another 20%, it might get back to the price that it is right now. I'm not saying that it's going to go to 250, but boy, oh boy, I think PayPal is going to be one of those stocks that are traded by everybody next year, because it's rare that you find a stock like this 42% off. It's just rare. All right. And when it happens, you got to know how to trade it. Okay. Somebody said rent to riches. That's what I do. All right, guys, I got to get out of here. It's 2:30. Sorry I didn't get to everybody's stocks like SoFi. So I think Noble's going to do something later. So if he is doing something later, you guys can ask him to show you guys those stocks. But before I leave, I want to make sure that you guys know about webinar week. Oh, it's gone. So hold on. Well, let's talk about the Insider Trading First Annual Aruba Trading Retreat and Conference. All right, if you haven't, I think the waiting list is like 100 and growing. So make sure you get on that list, and payments are due soon as far as that first deposit. So I know Christmas is coming. Make sure you make your first deposit first, then go buy your gifts. We're going to have a lot of fun. A lot of the stuff that we're talking about today, I'm going to go into real detail that only members at the Insider Trading retreat is going to have access to. All right. This is going to be a joint combo class that me and Noble give. And then we're going to do some fun things while we're there. We're even going to go live day trading one day, where we might even have two groups challenge each other with a prize on whoever makes the most money day trading that day, whether we're shorting the market or buying it to the upside. So that should be fun. But if you haven't registered for webinar week, please register for it. It's Tuesday, Wednesday, Thursday, December 14th through the 16th. You can find the link in the room. Just go to the events tab, go to link. And then when you go to that link, you'll be able to sign up through there. I teach stocks on the first day, options on the second day, day trading on the third day. A lot of the stuff that we talked about today, I'm going to go into detail. Like, I was already on 2 hours today. Y'all see how I was able to keep your attention. Well, some days I go 4 hours for Tuesday, Wednesday, and Thursday. And I always give a bonus video at the end of that week also. And you're going to get access to a couple of YouTube videos that I like. You're also going to get a workbook. You're going to have access to these videos for 30 days. If you need to get educated right now, you can always go to my PayHip, which is www.payhip.com/what would Joel do. You can get educated right now. Anybody that has the ultimate everything package, you have access to the Ninja Trading Room, which is a separate room that I created only for people that have bought my products. You also will have free membership to any webinar week that you want to attend. You will have free access to it as long as I do webinar weeks, as long as I have enough energy to do it. But for you beginners that just want to get educated now, you can always buy the beginner stock package. Anybody that's trying to learn options, I have the options package as well. And everybody that's watching this should already have my app. It's free. Download the app. It's free. It's free. Download the app. And through the app, you can get access to me whether you want to book a one-on-one consultation with me. The alert service is going to give you the hot stocks of the day. It's going to give you, like, let's say I'm buying something in my portfolio or taking something out of my portfolio. You're going to get it first through the app. And for those that want to do recordings and books through the app, you can do it through the app. I only advise people that if you're going to go through the app, that you are able to share that on a TV screen so that when you decide that you want to learn, you can learn on the biggest screen possible. Also, if you do the ultimate trading through the app, you're going to have access to all the content that I have available. Also, most people don't even know about that service. It's $50 a month. All right, and it's $20 a month for the alert service. But if you pay the 50, you get everything: the alerts, the classes, and you have access to webinar week as long as I'm doing it. So I'm coming to you guys from Decatur, where it's greater. Happy Friday, and I'm out of here. Peace.